Hello friends, welcome to Learn Easy. We will discuss circular flow of income. What is circular flow of income? The circular flow of income is an economic model that reflects how money or income flows through the different sectors of the economy. The economic wealth of nations is created by generating this flow and producing commodities, goods and services, which are then consumed by consumers who spend their income on these goods and services. Let us discuss circular flow of income in a two-sector economy. It is the flow of payments and receipts for goods, services and factor services between the households and the farm sectors. We have two principal components of the economy: farms, companies who pay wages and dividends to workers. Farms produce output. Households, individuals who consume goods and receive wages from farms. This represents a simple economic model. It is a closed economy without any government intervention. The national income is calculated in three different ways with the circular flow of income. These are value added method, the total value of output produced by the farms. Second, expenditure method, total amount spent on goods and services. For example, with wages from work, households can then buy goods produced by farms. Therefore, the spending goes back to farms. Third, income method, profit, dividends, income, wages, rent. This is total income received by people in the economy. For example, farms have to pay workers to produce the output. Therefore, income flows from farms to households. Let us discuss circular flow of income in a three-sector economy. Here, three sectors are the government, a farm, and a consumer. The government plays a crucial role in the economic development of a country. The financial market also plays an important role in a three-sector economy, as the government saves a part of their earned income and deposits the same in the financial market. The government also borrows money from financial market to meet its expenditure. Let us see how transactions are made among these three sectors. Between household and government, the money from the government to households flows in an economy in two forms. First, in the form of transfer payments such as old age pensions, scholarships, etc. Second, in the form of factor payments for hiring factor services of the households. This money flows back from households to the government in the form of direct taxes such as income tax, etc. Between farms and government, the money from farms to the government flows in an economy in the form of direct and indirect taxes. However, the money from the government to the farms flows into an economy in the form of subsidies. In this case, the government grants subsidies to the farms and makes payments to the farms for the purchase of goods and services produced by them. between farms and households. Farms pay households the factor payments, and households buy the products of the farm, and money go back to the farms as consumption expenditure. The financial market also plays an important role in a three-sector economy, as the savings made by the household, farms and government gets accumulated here. If you find the topic interesting and helpful, do subscribe my channel and press the notification bell. Now, let us see flow of income in four-sector economy. Besides households, farms and the government, the foreign sector also plays a crucial role in an economy. Therefore, the circular flow in a four-sector economy consists of households, farms, government and the foreign sector. Let us discuss the contribution of each sector. Household sector. The household sector of an economy provides factor services to the farms, government and the foreign sector, for which it received factor payments in return. Besides factor payments, the household also received transfer payments like old age pensions, scholarship, etc. from the government and foreign sector. The household sector spends its earned income on payments for goods and services purchased from farms, payments for imports and tax payments to the government. The farms receive revenue for the sale of goods and services from the government, households and foreign sector. They also receive subsidies from the government to produce goods and services. The farms make payments for taxes to the government, factor services to the households and imports to the foreign sector. Government. The government receives revenue for the sale of goods and services, fees, taxes, etc. from the farms, households and the foreign sector. It also makes factor payments to households and spends its revenue on transfer payments and subsidies. Foreign sector. The foreign sector receives revenue for the export of goods and services from the farm, households and the government. It also makes payments to farms and the government for the import of goods and services and households for the factor services. The financial market also plays an important role in the four-sector economy, as the savings made by the households, farms and the governments gets accumulated here. And this money is invested by the financial market in the form of loans to farms, households and the government. Let us conclude here. Circular flow of income is an engine that keeps economic activity in motion. It is a fundamental concept in economics that explains how money, resources and goods circulate between different sectors of the economy like households, farms, the government and foreign sector. This constant exchange makes sure that production, consumption and distribution take place in a balanced manner, ultimately sustaining the overall economic structure. That's all for today. Thank you for watching the video.